All right, sweet. Let's get into it. Thanks, guys. We're going to kick off. We haven't kind of got anyone in here yet today, but if some of them join as we go, then that'll be awesome. If not, it'll be a nice quick video and you guys can contact us afterwards if you've got any questions.
And welcome to those couple of new people who are joining us as well.
Absolutely. All right. So this is Jo and myself for those new ones who haven't kind of seen us before. I'm Tam and this is Jo. And we're some of the advisory partners here at PTP. We run all of these Profits Plus programs together, or sometimes you just get one of us. Beautiful. Now, we always go through this now, where, how. So at the moment, we're trying to teach you to know the basics. What we'd like to take you to is the where, and that's the having a strong management accounting knowledge so that you can make better decisions. And how are we going to do that? By going through this 6-month course. Feel free as you're going through this to make use of us. Like, you get us for an hour every month, which is really rare. So the more that you can come along, do the homework, ask the questions and figure out how this really relates to your business, the better value that you're going to get out of this program. So appreciate that not everyone can come here at this time. But, you know, even if you're watching the recordings, make sure that you even send us questions and we can answer them the next session and record that for you so we can, you know, move on. But it is best to attend in person so you can really ask us as you're going through any questions that you have. Now, we like to talk about the 3 stages of business improvement. So we've got the base. The base of business improvement is actually having that financial knowledge and awareness. Then it's understanding your strategy. Then it's overcoming your fears. Now, particularly this module today on knowing how much employees are costing you and looking at charge rates for those relevant industries really kind of incorporates all 3 of those tiers. So a lot of business owners have a lot of fear over increasing prices and all of that, but we want to educate you guys on what the real cost is so that you can make those informed decisions and figure out how that's going to work in with your business strategy and profit. Now, housekeeping rules and tips. Now, obviously, no one's on here at the moment, but everything in here is private. So what happens in the room stays in the room. We don't. We will be discussing some potentially private, sensitive information if we've got business owners in here and sharing things. So make sure that you're sharing what's comfortable and that, you know, you're happy, but we just don't ever take it out of here. Making sure, as I said before, that you're asking questions. It's what we're here for. We've got an hour, so try to remain clear of your phone, emails, and any other distractions. Keep yourself on mute if you're not actively talking, so it's not going to interrupt the video for somebody else. And keep your video on because it's much more engaging if we can all see each other. Use the chat feature or comments if you've got any questions while someone else is talking, then you're not going to forget about your question. And if you ever get kicked off the Zoom, just reload it, click the link that you got in here with, and it will bring you straight back in. Now, always remain open and willing to accept the new information or question things that you're being taught today that you may not have been exposed to, and just kind of sit with that, because sometimes we like to put our walls up and don't, you know, take it off. Okay, so today we're going to be running through the real cost of an employee. Next month's session, so you've got all the dates here for the next few sessions, so make sure you get them in your diary. It's always on a Friday at 10 o'clock. So the next one's inventory, stock and WIP management on the 10th of April, knowing your levers and KPIs on the 8th of March, cash flow cycle and turning profit into cash on the 12th of June, and how to read and use financial information in July. So make sure you get those in your calendar. Okay, now Jo sent around an email with some pre-work, so some homework, where we wanted you guys to bring along information about staff members' hourly rates and the hours that they work per week. And that's because it's going to be quite relevant as we go through. Now, let's just make a start. So what is an employee really costing you? So we have our direct costs. Now, direct costs are things that most business owners know about. This isn't probably a surprise to anyone. So actual wages paid per hour, the physical additional costs like super, which is 12% at the moment, work cover, which is generally 3%, depending on your industry and if you've had any claims, but we just generally take into consideration 3%, and any long service leave. Now, some relevant industries have that at 2.7%, but I like to always take it into consideration, even if you're not in those industries, because you will be accruing it over time as well. So let's jump into an example. Now, we're going to build on this example each time. So say you pay one of your staff members $30 an hour. The super on that is $3.60. Their work cover is $1, and their long service leave is going to cost you 90 cents per hour. So your total direct employment cost per hour is $35.50, or if they work 40 hours a week, so we'll usually work on full-time employees, then it's going to cost you about $73,840 per year. Now, this is a common misconception of owners that what goes out of the bank each week is what you're paying. And what I just want to clarify here is that's actually the net wage. You also withhold tax from that each payroll. That if you're not kind of setting aside, it's going to get used in your cash flow. And you also have to pay super on that as well. So the work cover kind of happens each quarter, long service leave happens each quarter, or it's accrued, but your super and your physical wage going out and the PAYG that you need to pay on your BAS is all in there. But sometimes we just think of the wage amount as what the net amount that goes out of the bank. So that can actually give you a bit of a false sense of what's going out. The more in touch you are with what that real cost is and the cash flow implications, the better it will be. Now, we will talk about buckets and all of that in Module 6, but just so you're aware that it's not just what's going out of your bank. Kind of having this understanding today will be really helpful. I also just wanted to note that if you're not paying super every payroll cycle at the moment, that from 1st of July, we do have this new ATO regulation coming in place that means that on every payday, you need to pay the super for that pay period. Now, usually in the past, we've had, paying it once a quarter. So every 3 months, we accrue the super, and then you've got 28 days to pay it. That's coming, that will stop from 1st of July for all business owners. And you will need to pay it through the clearinghouse from 1st of July every single payroll cycle. Now, if you're using a program that just automatically does it for you, like a Xero, then nothing will change. But if you're physically logging into, say, the ATO clearinghouse, that's actually going to stop and cease as of 30th of June, and you will need to find an alternative method. So just be aware of those changes happening in this space while I was presenting that. Beautiful. Okay, so that total, just remember that total direct employment cost of $35.50 is that gross wage, super, work cover, long service leave. Okay, now that's all the stuff that generally every business owner is across. We want to talk about now this indirect employment cost. So what happens, is most full-time staff members don't work 52 weeks of the year for 40 hours a week. They have leave, they accrue leave. So they've got 4 weeks of annual leave and leave loading, 2 weeks of sick leave, and 2 weeks of public holidays when you add them all up. So they're really only working for 44 weeks of the year, not 52. Now, building on the example from previously, your annual salary of $73,840 plus your leave loading and your superannuation on that is actually $119.28 per hour. So
I think that's super. That 190
oh, sorry,
is super on the leave
yeah,
loading.
sorry, Joe.
Yep.
I was like, hang on, that's
okay.
not right.
No, it's worded a bit strange. So
yeah,
just
it is actually,
those two,
isn't it? I was
those
like,
two
when
added
I
on top
read
of
that,
that.
I was like, that's not right.
Yeah.
The 74,953 is your annual. That 119 super is the super on the leave loading. So when you add all of that together, that annual cost jumps up another, say, just over $1,000. Now we need to take into consideration the amount of weeks that they're not going to be actually actively working productively. So you're paying them to be on leave. So you divide that by your 44 weeks and your 44 hours. They're actually costing you $42.59 per hour that they're working. So that's a really big jump from the slide before.
Go back to the slide before, Tam. What's that? The difference there?
I was just going to say $35.50 it was.
Yeah, so it's
it's not gonna want to here. Hang on, sorry, it just jumped ahead. There we go. So yeah, $35.50 per hour to now $42.59. So that the leave component already adds nearly $10 per hour. So just be mindful of the impact that actually has. Now, I think I just wanted
just on that, Tam, even if they don't take leave, so even if you've got people that are accruing 4 weeks of annual leave and only taking 2, stuff like that, at some point in time, that's going to come out in the wash because either they're going to use all that leave at some point in the future, or when they leave, they're going to need to be paid out that leave. That's right. It's still a cost, just the timing of when you incur it. That's all.
100%. Yeah. So we like to kind of take it into consideration now as you're going through, so you're aware of it, and when it physically gets paid out, it happens when it happens, as Jo said. Now, the other thing that impacts, that's another indirect employment cost that most businesses really don't take into consideration, is productivity, and it's the really big one, and what affects the profitability of a lot of businesses as well. So staff aren't productive for every minute that they're working, and we need to make sure that we're taking that into consideration with what they're costing us. Now, we always say we would lose 20% productivity in a business that's just a really good, well-run business. So you've got morning tea breaks, you've got staff meetings, workflow meetings, just staff being able to have a culture where they can chat and things like that. So generally speaking, on a really good, well-run business, we lose 20%. Now, when I'm talking to most business owners, they seem to think it's only 5%. So there's a really big difference in what their thought process is on how much they're losing in that, and what actually happens when they start tracking the hours around this. So my, number one tip is that you actually track and do some timesheets if your staff don't, so that you can really actually quantify this in your business. But on top of the 20%, if your internal processes aren't great and the workflow isn't smooth, this unproductive time can be a lot higher. And that means that you can't charge all the hours, and that in turn increases the productivity. So I've got some examples here below. So the example carried forward from the previous slide, that cost of $42.59 an hour. Now that is obviously the direct costs of their wages, plus the fact that they're not working for 52 weeks of the year, so they're only working the 44 weeks. But when we take into consideration the fact that they may only be working 80% of the time that they're actually there, or 60%, you can see here that cost per hour is jumping up to $53.24 and $70.98, which is a really big jump. Now, granted that when I ask most business owners what a staff cost you per hour, they're telling me the $30 that they're paying per hour, right? So if you're mentally kind of going, oh yeah, they cost me $30 an hour because that's what I'm paying them per hour, and the reality is that it's costing you at least probably $53.24, or if your internal systems and processes or that sort of thing aren't great, or they don't have a really highly productive role, they've got some administration in there, then it could actually be costing you $70, which is more than double what most business owners think. So just be mindful of that. Now, we do have a work paper that's going to help you put this into your business and work it out. So that's this one here. Now, we've got the cost of an employee. So you put your hourly rate in, you put the weekly hours worked, and it will work it all out for you. It puts your on costs, and then it will have different productivity things there as well. So you can muck around. We've got that will come out in the email afterwards. But you can just work out what that cost is per employee really, really easily by chucking it into the spreadsheet. You don't have to be doing, anything crazy like I have on the previous slide. That's just to step it out so you can start to understand. But this here is, it's taking into consideration the 44 weeks of the year and then the productivity percentages of 80 and 60%. So we will send that work paper out for you to have a play around with. Now, no one's here to do the exercise, but I really, really want you guys to be doing this at home. So let's look at what these employees are physically costing you. So we asked for pre-work for you to bring their hourly rates and hours worked per week. So in the workbooks, I want you to answer question 1, which is, what do you think the staff member is costing you per hour? Before we go and work anything out, what is that? Then I want you to input the pre-work information into the top 2 white fields. So the hours worked and the hourly cost, to really work out what that staff member is costing you. Then I want you to complete question 3, which is a reflection. So we usually discuss that as a group, but do the reflection and then feel free to email Jo and myself. And then for the rest of the homework, I want you to go and complete it for every single staff member so that you've got a really good idea of what they're costing you per hour.
Now, for those of you that, for those, there are a couple of people on that will receive this that haven't got employees that are looking at putting them on in the future. Probably just run this through whether there's a couple of roles there or one role or whatever. Have a bit of a look at what you think that employee will cost you for the roles that you're looking to fill, and complete the same exercise for that. So if you haven't already got someone but you're thinking about putting them on at some stage in the future, just use the hypothetical future numbers for the same exercise.
Yeah, absolutely. And appreciate the fact that we're going to go over some charge rate calculations. If you're in an industry such as like retail or hospitality or something like that that doesn't charge staff, it's really still very, very important for you to know this. The reason being is that then you can figure out how much it's costing you per shift to keep people on. And if you don't have sales coming in of that, then you can be starting to make some strategic decisions around opening hours and things like that. So it's really important for all business owners to know this with regards to their employees.
We actually had a client of ours in one of these a few months ago that runs a fruit shop, a retail fruit shop, and this was one of the big ones for him. It wasn't charge rates, obviously. For him, he sells fruit and veggies and some groceries at a margin. But obviously, he's got team members that he needs on hand to help him to buy the stuff, source it, price it, and then sell it in the shop. And does a bit of wholesale stuff as well. And one of the things that came out of this for him was that his rostering was not as efficient as it could be. And he made some pretty significant changes. He's in the process of making some pretty significant changes around that when he realised how much the team were actually costing him, and the efficiency piece or the productivity piece of them sitting around, or 2 people being able to do the same role of 4 people in the shop at any one point in time. So it's definitely worthwhile having a look at. Yeah, definitely. Absolutely. And I think it's really like a good point that you make, Jo, that it is relevant to every single type of business owner. It's just, don't feel like it's not relevant to you, because it's in somewhere in your business, it will start to make a lot of sense. So we want to really go into, why does productivity impact? So we spoke about obviously the financial impact of productivity, but let's run through an example to just explain it a little bit further. So if one staff member worked 40 hours a week and is 20% unproductive, that equates to 8 hours per week or 384 hours per year. That's a lot, isn't it? Like, that is a whole day. When our business, Jo and Mai's business, is very heavily, per hour kind of charges, and productivity is a really big lever that we look at in our business as well. So say, for instance, you charge that employee out at $100 per hour net of GST. That's $38,400 per year just for that one staff member that you're losing off your bottom line. So if you can increase that productivity of them by just 10%, that increases your profit by nearly $20,000. And that's just the impact of one staff member. So imagine if you had 5 or 15 or 30, how much that productivity hits that bottom line.
And it's a hidden cost because it's not, you can't see it in an expense line. It just means that your income's not as high as what it should be. But if you're still a reasonably profitable business, you're not going to be looking at these sorts of things. And that's why it's so hidden and why it's one of the biggest killers of business, isn't it, Joe?
It is. It's an opportunity cost. It's if you've got people there that can deliver a service or a product or whatever, and they're not for whatever reason. And this isn't a knock on the employees. Quite often, it's quite often a reflection of the efficiencies within the business. Productivity can be taken as a real negative. Like if you're not productive, you're not doing your job. That's not the case at all. The word productivity basically just means that it's how much of your time is being turned into dollars, how much of an employee's time is being turned into dollars versus not turned into dollars. And as you rightly said before, Tam, there is no one on the planet where 100% of their hours that they work are turned into dollars. It just doesn't, you can't do that. You might be able to do it for a day, but you're not going to be able to do it on an ongoing basis. So absolutely, I think this is really all about looking at it and saying, and it does scale across the number of employees you've got. It's looking at it and saying, okay, what can we do to make sure that we're giving the team the best chance to support them and give them the best chance to be as productive and useful and valued by customers and clients as possible. Yeah.
Absolutely. So what's impacting productivity? So your internal communication is. So ordering parts and the timing of that, poor instructions, not giving staff enough guidance. The workplace environment affects it. So your space not being fit and the most productive way of doing whatever work you're doing. Interruptions or calls coming in, or staff even interrupting each other. Training, so internal and external training. So obviously there's a real upside obviously in doing training, and if you send someone out to go and do some external training, so say for instance they go get a truck license or some sort of license or external course, you generally know that that's going to cost you in the physical amount that you've paid for that training course, but it also costs you in the time that they're out to do it. And again, it's that opportunity cost. You can't build that time because they're training. But what we forget about sometimes is that internal training. So when we're training other staff or when we're upskilling or, running through things, that's also a productivity, a bit of a productivity hole and a cost to the business that we don't generally track or reflect. Technology. So not utilising or leveraging technology, not utilising the most up-to-date technology can mean that you're doing things a longer or more unproductive way than what is in the market now or what other businesses might be using. Employee engagement. So if staff aren't engaged or don't love what they're doing, if they're distracted or they're doing the bare minimum, that can be a productivity drain. And one that again is not really quantified very much is rework. So having to redo a job. So you go to a client and you go and put a light in, but that light was in the wrong place. So you've got to go you've got to go back the next week and redo your work because there was a mistake or wrong instructions or that sort of thing. That sort of rework is again another really big opportunity cost. You're spending more hours doing unchargeable work when you should be or could be charging that to other customers. So just regrouping on what we said before, if just on a staff member that works 40 hours a week, we could impact our bottom line by increasing productivity by 10% by nearly $20,000. And that's compounded over all staff. Now, Joe and I have been working with someone in the background that thought their productivity was around 70%. They knew that it wasn't good and they knew that they weren't running things as efficiently as they could. So they kind of ballpark thought it was 70%. When they started tracking it, it was 30%. So they've really actively put a massive focus on this in their business, really tracking, looking at how many hours they're billing, look at the cost of training, educating themselves on what this is costing. And they've been able to get that up by 20%. So it's still only at 50%. But the impact to their bottom line and their cash flow has been incredible. So they've still got a long way to go, but it really has made a really big difference honing in on this stuff. So if you think that this is an issue for you, make sure that you reach out to Jo and myself just to have a bit of a chat. So what can you do to improve productivity? So let's set some realistic expectations of staff and communicate these clearly to them. Have them know their role and how they're part of the bigger picture of your business. Have them also aware of what productivity percentage you're trying to get them to hit as well, and then doing some feedback as to what they are actually getting. So if you're wanting them to hit that 70 or 80% or 90% or something like that, having the conversation with them to make them aware of it, and then having some sort of tracking mechanism to make them aware of what they're actually doing can be a really big benefit in just them being aware, because quite often staff don't think about this sort of stuff. Making sure your workflow process is as clean and efficient as possible. So making sure things are organised and explained and well documented will make sure that there's no miscommunications. Seeking staff feedback on how you could improve things is really good too, because on the ground, the business owners tend to be a little bit out of touch of what's happening on the ground sometimes. So the staff might have some really good relevant feedback on how to improve efficiency and productivity. Now, if that's a really big issue in your business, then Jo and I run these things called workflow sessions where we get the whole team together and we run through every aspect of your workflow process from start to finish, from like initial customer call in right through to the invoice and debt collection. So every single step in that process. And that can be a really good, powerful thing for the team to improve efficiencies. So yell out if that's the case for you. Now, ensure that you're identifying areas that will give you bang for buck. So not just training for training's sake, but doing real training tailored to where you're going to get your best results. Effective time management. So being clear with the expectations around how long something should take. Implement some sort of time tracking tool, as I said before, and minimize tasks that staff have on the go so that they can just get one thing done, move on to the next thing, get another thing done. It's really, when you've got 50 different things open, that's really inefficient jumping from one thing to the other. It doesn't matter what industry you're in, that's just really an inefficient way of doing things. So you're better off just having less tasks and on the go and just focusing on just getting that one thing out the door. And use technology wisely. So implement this where you can so that you can get some efficiency through that as well. So moving on to charge rates for those that are in an industry where you charge time. So things like professional services, like Jo and I, trade-based businesses, they all charge it on a timely basis. So charge rates for businesses refers to the amount that you charge your customers or clients for the product or service that you provide. And they're crucial to a business's pricing strategy and in turn profitability. So we're going to make you help you work out the cost per productive hour. So we've already kind of worked part of that out now, but at a minimum so that you know what you should be charging to break even or at least not go backwards. And this is a really big area that a lot of businesses don't really no one teaches you this sort of stuff before you go into business. So things that we like to consider when we're working charge out rates out are the cost to run your businesses. So those direct and indirect costs that we've been talking about, but also your overheads. And quite often a trade-based business, we're aiming in our charge rates for employees to cover all of the business costs and you make your money on the markup of materials. So say, for instance, you're an electrician, your charge rates cover all of the cost of the business. So you're making a margin on your light switches and your conduit and those sorts of things to do the job that you do. Profit margin. What kind of profit do you actually want to make from your business? And what does that look like? Market research. What are your competitors doing? Not that we, ever think that you should be just matching what they do, because they could be not educated, not having an idea of what this looks like. But to be aware of where you sit in the market. Are you top? Are you middle? Or are you bottom? value proposition and customer perception. So what kind of service are you offering? Is it something that can be sourced elsewhere? How can you be adding more value? How can you be giving them a better experience for dealing with you guys? And industry standards and regulations. There are some sort of industries that have got this heavily regulated that you may need to be aware of. So how do we calculate it? We always start with knowing your costs. So we've already gone through, as I said before, the direct and indirect employment costs. So things like the cost per hour, super, work cover, long service leave, productivity, the number of weeks that they're actually working for the year. But now we need to consider things like what is it costing to run your business? So overheads are things like rent, utilities, administration, accounting fees, that sort of thing. And administration wages are part of this, because in a business that charges per hour, there will be productive team members and unproductive team members. So productive team members are the ones that are going out and doing the job. Unproductive team members are the ones that are quoting, doing the bills, in administration, coordinating things behind the scenes, ordering parts, and quite often that's not taken into consideration at all. And if you don't take,
it's probably just the distinction there is probably more again with that word of productivity, but it's probably more that billable versus non-billable people. Because obviously the administration people are still going to be, if you look at that term productive, they're going to be busy doing what they're doing, but you can't recover costs.
That's right.
From that directly. You don't necessarily bill a client for that. But you think about a Sparky business or something like that. You send someone out on site. Generally speaking, they're going to get a fee for someone coming out there, hourly rate, materials, all that sort of stuff. And then the admin team have got to put together the invoice and make sure that gets paid. The thing that's recognised is the hourly rate with the people that come out and do the work. But the reality is there's a cost, obviously, for the people that support that as well.
That's right, exactly. And you can't go and charge a customer, you go out on site for 3 hours and that's what you can charge them. You can't go and charge them for the 5 hours that it takes you to pack the utes, get the parts, go out there, come back, do the bill, and all the different people, in that process. So yeah, that's kind of why we come and have a look at it here. So what we're doing is we want to add up all of those overhead costs and then divide them by the productive hours, as Joe just made that or the billable hours. So that will give you an overhead cost per billable hour, which is going to allow you to add to the direct costs that we've already worked out. So I also like to make the suggestion that you do this with your loans too. So things like ute loans, to be able to get the staff from A to B, or that sort of thing, that's a cost of running your business too. So don't forget that it's not just the overheads and the costs in your profit and loss, that it is also some of your balance sheet items as well. Now, if you haven't done module 1, which is the understanding financials, we'll go through that a little bit more in that one. But you've got another worksheet to kind of help you work this out. So in worksheet 2, there are multiple tabs for you to complete. So tab number 1, you enter all your staff costs that we went through earlier. Tab number 2 is where you enter your costs. So you can see here you've got your operating costs. Then tab 3 works out those charge rates holistically, including the unproductive time that we were talking about earlier, loans and overhead. Now, tab 4 is then when you can see it, on an individual employee basis. So that, for instance, if you do have that sort of business where you are charging people out and you might have apprentices and qualifieds, you can see the difference in what you might have to charge for an apprentice and what you might have to charge for a qualified. So just to kind of break it down and just to give you a bit of an example to explain it so that when you guys go do it, you've got a bit of context. So business owners, Emma and Ben, have 6 staff working for them, some apprentices, some qualified, some office admin. We go and put all of the staff details into tab 1 of this worksheet. And I want to just point out here that the business owner, Ben, is in administration hours as well as chargeable hours, because he's only charging out 50% of the time that he's working, and the other 50% is just running the business. So he's split himself between the chargeable employees and the administration employees, and only put the hours worked. So he's put 20 up the top and 20 down the bottom. So that might just be something that you'd like to consider as you're going through. Just also note that we've got a trade school hours per year in there as well for your apprentices. So some industries have a week per month for 10 months of the year, which is actually equates to 400 hours per year. And that's another big thing that you need to take into consideration when we're talking about these billable hours as well. So on that previous slide, oh, hang on. That's not what I want to do. I don't know. Just trying to go back. Sorry, guys. It's a bit touchy here. There we go. So we can, oh, hang on. Sorry, excuse my, that's just gone too over again. There we go. You can see here down on in the middle of the screen where it has the total direct cost for the billable employees is 426,532, and your total direct cost for administration is 174,000. These flow through into the next tab. So I've kind of just popped them up there, but it gives you also in the previous one, those total productive hours of 8,836, which is then used in multiple other tabs. So we then go, and in this second tab, we go into all of your overhead costs. So your rent, your accounting fees, and all of that. And you can do that from your accounting program quite easily. It then pulls in those administration hours here down the bottom. You can see it's in blue, light blue, 174,000 from the tab before. And it divides that by your productive hours also from the tab before. So that gives us an overhead cost of $37.97 per hour. That's really common. Quite often it is around that $40 an hour administration cost for most businesses that we work with. Some are higher, some are lower, but generally speaking, it's roughly around there. Now, loan repayments are the other thing I was talking about before. So per month, your loan repayments are costing you $4,600 for a digger and a couple of utes and a car. The cash flow cost is $55,200 per year. Divide that by your productive hours, and it's costing you another $6.25 per hour. So that shows that when you add, both of those up, you're well over that additional $45 per hour on top of, remembering from a couple of, slides ago, we've got the direct cost, then we've got the hours worked, then we've got the productivity, whether they're 80% or 60%. All of this is on top. So we're building to what it's really costing you per hour. So this is where it ties it all together for you. So you've got your labour cost per hour, your overhead cost per hour, and your loan. And this one here is costing, like this example, it's costing $104.56 per hour. Now, if you're charging $100, then you're going to be losing money, aren't you? Because you're already losing $4.56 per hour, and that's not really taking into consider any additional downtime that you might have on the job. So quite often what we say is you want to bill over and above that. So if you were to charge 105, well, you're breaking even. So we'd want you to be kind of going a little bit further than that and kind of saying you should be at least charging $120 an hour. That will then give you a $15.44 profit per hour, or 13%. So that was kind of where I was saying earlier, you need to know what profit you want to make in your business, because if we're breaking even here, it doesn't give us any room for error in any jobs at all. So just be keeping that into, taking all of that into consideration. So you might have other income and expenses that might relate to buying or selling of the goods. Generally, they're not taking into account with these calculations. So like that's purchases and of goods, if you're charging those out separately, because it's assuming that you're going to make a markup on those. So for instance, quite often like a plumber or a sparky will order goods in for the job and then charge them when they charge the customer. So we're taking all of that out. And as I said before, there's that fourth tab in the workbook that will give you an individual employee by employee one of this as well.
Quite often when we do this exercise, well, nearly always, business owners are surprised by what the result is. Because generally speaking, people set their charge rates just purely based on what they've charged previously to a job they were at, or what they know their friends charging, or someone within the market's charging, and then try and make it work backwards from there. Now, obviously, you're limited by that to a degree. You can't just if your charge rates. If this calculator says it's $200 an hour and everyone else is charging 120, well, you can't just be charging $200 an hour. It's then looking at it and saying, okay, what do we need to change within the model to make that profitable? But the amount of people that we would see that would be flat out, and this is what you often hear with trade businesses, we're flat out and we've grown and we're really busy. The guys are all really busy, but we're not making any money. And this is exactly why, because they're charging $105, $110, and that's their cost. So that's absolutely correct. You're not making any money if you're doing that. You're as Tam said, you're purely breaking even. And for the risk and the time you're taking and the investment you make into that, obviously, we need to be making some profit from that to be reimbursed for that. So it's quite often a discussion around, okay, one of two ways, either we or both. We either need to increase our rate and get it up to a level that's profitable and fits the market and fits your business, or we need to reduce our costs somehow to get that margin there, because otherwise we keep going along the same lines.
Yeah, and I just want to point out, Joe, that quite often with a business that has really high overheads, it's that we're geared up and don't have enough productive team members on. So to drop that overhead cost per hour, you actually need more staff and more jobs going through the system to be able to cope with the overheads. So just being aware and having conversations around it can be really, really powerful for business owners. But this example continued. If the business chooses, so obviously it costs $104.56 per hour. If the business chooses to charge $105, it only makes a really small profit on labour and doesn't ever take into consideration any lost production or rework or inefficiency. So that's not going to be enough at all, because quite often in these trade-based businesses, there is inefficiency and rework, and it can be a really big cost to them. So what would happen if they charged 110? They're making a profit of about 48,000 for the year on labour. If they charge 120, it's 136,000. So the above example shows that if they were to charge that, they have a buffer to be able to wear some of that unproductivity, lost production, and rework. Option one just doesn't give you any flexibility that if anything doesn't go exactly to plan, which, let's be honest, life doesn't go to plan, work doesn't go to plan, but you're instantly going to be in a loss position. And that's where what Joe was talking about before is that quite often we know what that number is. We want to keep our customers, and we just do that, bare minimum. Well, it's not, that's why people don't make money. So what else do you really need to consider when we're having a look at this? I do like to know what competitors are charging in the market and what the market can handle and what people are willing to pay, because as Joe said, quite often what we see now is the cost of the per hour charge is actually more than what the market will pay at this point in time. So it's then about thinking of other things that we can be doing to make the business profitable. What's your point of difference? So what's making you as a business different? What's the customer experience like? What's your reputation? What kind of profit do you need or want to make? And we have to work backwards to achieve that. Your mental attitude towards pricing and confidence in selling the charge rate. And quite often just being educated through this process will help with that. But it's the biggest barrier that Joe and I come across is more so what you think you can charge. And quite often when we start to work with business owners, those walls go straight up. But when they work through it and they start to do things, it's never as bad as what they think.
That's right. It's coming back to that, one of those very first slides we spoke about, which is the beliefs and fears.
Yes.
Because once numbers are all fine, but at the end of the day, a lot of what we do or don't change is based on what we believe we can do, or what we believe we can't do, and that's no different in business. So if we're feel like we're trapped at a certain rate for whatever reason, and don't see any other way out of that, well, you're going to be stuck there. So it's quite often our job to talk people, as Tam said, talk people through that and make sure that they're comfortable with what that looks like, because it comes back to that same thing. If we don't change what we're doing or don't change something about what we're doing, we're going to get the same result.
Yep, 100%. So something else to consider, every time your labour force, your chargeable labour force changes, this does too. So if you decrease employees, so if you get rid of someone or they leave, then your overhead cost per hour is going to go up. If you put more staff on, then it's going to go down. But so knowing what this number is and keeping your finger on the pulse is really important.
Sure, talk about things like economies of scale and sweet spots, because there'll be sweet spots in business where your overheads, or you can build your team members up, say, to and be supported by a cost base that's, whether it be 2 people or 20 people, the overhead base can be pretty similar. Once you get above that, well, your overheads might increase pretty significantly. So you might go through a bit of a tough patch until such time as you build it back up to the next sweet spot. So it's just being aware of what that looks like as well.
Yeah, definitely. So I just wanted to kind of make note of any contract or fixed price contracts. Contract work or fixed price locked in stuff. So quite often with quoted work like that, you could be bleeding hours because the quoted amount of hours is very different to what the actual hours are on a job. So always making sure that you're tracking that and having this feedback loop to whoever's quoting that this is actually how long it takes to do that job, and continually do that. Because that just means what we see a lot of is just like a lot of bleeding hours and actually making a loss on jobs when, again, there's that opportunity cost. If you've quoted work and you're going to spend 100 hours, you spend 150, not only have you lost 50 hours of work on that job, you've lost the opportunity cost of actually getting income in from another customer of those extra 50 hours. So making sure that you have those feedback loops, if you are charging like a per hour rate, that you're tracking the hours so that you're making sure that you're able to recover as many of them as you can. Beautiful. So if obviously there's no one here to have any questions, but as you're going through the homework, there is a lot in this particular module. So as you're going through utilising the work papers and trying to get your head around it, if you've got any questions, please feel free to reach out to Joel or myself. We will be sending an email now with the recordings and all of that sort of stuff. So give it a crack, put your numbers in there and figure out what your staff are actually costing you or what your potential staff are going to cost you. Or if you're in one of those industries where you work out the charge rates, follow that right through and really spit out what that looks like. I'd love to be able to, for everyone, all of you in the program, to actually send Joe and I an email with, hey, I've done this homework and this is what it is. Just even so you've got that accountability of making sure it gets done. Beautiful. Thank you for getting to
can make a massive difference for sure. Yeah.
Thank you for making it all the way to the end of the video. Hope you got a lot out of that. We will see you next month on, let me just look at that.
April, I think it is.
Yeah. The 8th of April, did you say? 10th of April.
10th,
and we're going over the inventory, stock and WIP management. So
we're also going to discuss lazy assets as part of that as well.
Yeah, definitely. Beautiful. All right, guys, we will speak to you then. Yell out if you've got any questions. Thanks.
Right.
Stop recording.